Hello and welcome to traders and investors. I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. Today is June 14 and we're starting from euro-dollar pair with Jakub Nowak as usual. Yesterday's CPI data from Germany as well as Economic Sentiment Index for Germany and the Eurozone limited the upward potential of euro in the morning. This extended in the afternoon, even after reports indicated that inflation in the US dipped. As today's empty economy calendar and incoming industrial production report for the Eurozone could not reverse the market, traders should stick to long positions, waiting for the results of the Fed meeting. For long positions, buy euro when the quote hits 1.0798 and take profit at the price of 1.0842. Growth could continue after good statistics. However, when buying, traders should make sure that the MACD line is above zero or is starting to rise from it. Euro can also be bought after two consecutive price tests of 1.0770, but the MACD line should be in the oversold area this time, as only by that will the market reverse to 1.0794 and 1.0842. For short positions, sell euro when the quote reaches 1.0770 and take profit at the price of 1.0728. Pressure may return after the Fed meeting. However, when selling, traders should make sure that the MACD line is below zero or is starting to drop down from it. Euro can also be sold after two consecutive price tests of 1.0798, but the MACD line should be in the overbought area this time, as only by that will the market reverse to 1.0770 and 1.0728. The next stage of our review is the next major, GBP USD, presented by Sebastian Seliger. The GBP USD pair has bounced from the level of 1.2486, broke above the 50 MA level, and it's counting to move higher towards the key technical resistance level located at 1.2680. Any violation of this level would be even more bullish, so please prepare for bears to defend this level strongly. The intraday technical support is seen at the level of 1.2598 and 1.2540. The strong and positive momentum on the H4 timeframe chart supports the short-term bullish outlook for GBP. Gold, sweet gold. We've got a trading plan for this commodity asset presented by Dimitrios Tapas. Early in the European session, gold is trading around 1947. A key level below the 21 SMA and above the 7-8 Muri level. The US interest rate data will be published in the early hours of American session. Investors believe that the federal funds rate of 5.25% will remain in place for the next few months. According to the daily chart, we can see that since the beginning of May, gold has been forming a symmetrical triangle pattern. Gold is likely to continue trading within this technical pattern until a sharp break of this pattern occurs. In the next few days, gold is expected to continue the consolidation. In case the price breaks any border of the symmetrical triangle in any direction, then we could expect a bullish or bearish movement. If gold consolidates above 1970, the uptrend is likely to resume until it reaches the psychological level of 2000 USD. The metal could even approach the high of 2077. Conversely, if the gold price falls below 1937, it could trigger a sell-off and the gold price could drop the 200 EMA, located at 1875. On March 10, 2023, gold left a gap at about 1967, which is expected to be covered in the next few days, provided the gold falls below 1937.78 Muri level. If the downward pressure increases, gold could reach the bottom of the uptrend channel formed since December 2022 at around 1850. Our trading plan for the next few days is to buy gold above 1940 with targets 1958, 1966. As long as gold trades above 1937, there is a chance that it will continue to bounce and gain strength until it reaches the psychological level of 2000 USD. What about CL commodity asset? Area of Makmur got a mid-term trading plan. Let's have a look. With the appearance of deviation between price movements and the MACD oscillator indicator, on the 4-hour chart, crude oil commodity assets, in the near future, CL has the potential to appreciate corrected rally upwards to test the bearish order block level at 70.62. That is the main target, and if the momentum and volatility are sufficiently supportive, it's not impossible that the 200 EMA will be the next target to aim for, provided that, on the way to this target, it does not occur. CL returned to its buyers again, especially not to break below the 67.92 level, because if this level is successfully broken, then the scenario of an upward correction that has been described will become invalid and cancel by itself. And finally, here's Laurie Bailey with USD GPY pair forecast. The dollar has approached an important resistance level at 140.35. Overcoming this level naturally opens up the target at 142.30. The Marlin oscillator is staying in the positive territory but appears weak. The pair is likely in a waiting mode ahead of the Federal Reserve's interest rate decision. If the price falls below the support range of 138.40 and 140.35, due to the impact of these decisions, it could find support at the MACD line at 137.55. On the 4-hour chart, the price has moved above the MACD line, blue line on graphic. and Marlin oscillator is progressing in the area of the uptrend. The current situation favors growth, but the market will make its final decision based on the Fed's announcement and the press conference of Fed Chairman Jerome Powell. That's all for today. See you online soon. Good luck.